Are you struggling to make money when prices keep going up? Well, here's Warren Buffett, the super rich guy who's really good at making money. In this video, we're going to learn some smart tips from him on how to do well when everything is getting more expensive. So, let's dive into the things he knows and see how they can help us make more money too. In our modern economic landscape, inflation has emerged as a looming and substantial concern that casts its pervasive shadow over a broad spectrum of society, including individuals, businesses, investors, and political decision makers. This persistent economic phenomenon has dominated discussions and occupied the collective consciousness for the past year and a half, creating widespread unease and uncertainty. Against this backdrop of economic turbulence, we embark on an exploratory journey to delve into the intricate and multifaceted realm of investment strategies that prove effective during periods characterized by inflationary pressures. The insights we will glean are none other than those bestowed upon us by the venerable sage of investing, Warren Buffett himself. At the age of 92, Mr. Buffett has accrued a wealth of experience and wisdom, honed through decades of navigating the undulating currents of inflation and its consequential impacts on financial markets and investment strategies. Warren Buffett, a renowned figure in the world of finance, is sounding a timeless piece of advice that remains relevant through the ages. Hoarding cash in the midst of surging prices, such as during inflation, is far from a wise strategy. The value of the money squirreled away in a conventional savings account gradually diminishes day by day, week by week, month by month, and year by year within this economic environment. This situation begs a crucial question for any astute investor. How do we protect our wealth from the erosive effects of inflation? To answer this question, let's delve into a scenario. Imagine you make an impressive 12% return on your investments in a given year. On the surface, it sounds like a triumph. However, the insidious influence of inflation, which is relentlessly eroding your purchasing power, reveals a different story. If inflation is running at a formidable 7%, your real return when factoring in this financial headwind amounts to a rather disheartening 5%. So, what does this mean in plain terms? It essentially highlights the fact that letting your money sit idle in a low-interest savings account while prices are rising around you is a recipe for losing purchasing power over time. As an informed investor, the prudent course of action involves looking beyond nominal returns and examining the real inflation-adjusted gains from your investments. By doing so, you can ensure that your wealth not only keeps pace with the rising cost of living, but also grows over time. In essence, Warren Buffett's ageless advice serves as a stark reminder that in an era of inflationary pressures, simply stashing your cash away can erode its true value. To protect and grow your wealth, it's essential to explore investment avenues that not only offer returns, but also factor in the impact of inflation, ultimately safeguarding your financial well-being for the long haul. Now, let's talk about bonds, which are kind of like loans that you give to the government or other big organizations. People often think of them as safe investments, like putting your money in a sturdy vault. But here's where it gets interesting. Warren Buffett, who is really good at this investing stuff, is saying that when inflation or the rising cost of things starts going wild, those bonds might not be as safe as they seem. Right now, think of it like this. Imagine a special type of bond called the US 10-year Treasury bond. Its performance, or how well it's doing, is all over the place. It's like watching a roller coaster, and it's all because people are worried about prices going up too much, which is what we call inflation. These people, who are experts in this stuff, are guessing that the folks who control interest rates, like the cost of borrowing money, are going to raise them a lot. And because of that, the 10-year bond might end up giving you less money than you put in. especially when you think about how prices are going up too. So in simpler terms, when inflation is running wild, even though safe-seeming bonds might not be your best buddies for making money, they could end up giving you less than you hoped for, all thanks to inflation. Here's something interesting. Warren Buffett, the big-time investor, is suggesting that we consider putting our money into things like gold, silver, and precious metals. Now, these things are like superstar moneymakers that will magically make us rich, but they do provide a kind of shelter when the financial storm clouds of inflation are gathering. This advice might seem surprising, because in the world of economics today, people often see gold as a sort of shield against the dangers of inflation. Historically, gold has been seen as the hero in the battle against rising prices. However, it's worth noting that this isn't how Warren Buffett used to see things. He was once skeptical about investing in gold. Now, when experts hear this advice, they have mixed reactions. Some cheer for gold, saying it's like a strong fortress protecting your money from the dragon of inflation. Others shake their heads, claiming gold is a bit of a dud since it doesn't generate income by itself. So the big question here is whether you should focus on investing in things that can make you more money, like stocks and real estate, or if you should follow the alluring call of gold and similar shiny assets to shield your wealth from inflation's relentless attacks. To put it simply, if you want to not just keep up with rising prices but also grow your money, you should follow Warren Buffett's advice and invest in things that can make you more money. These are like magic money machines because they can generate extra cash, and you don't need to put a ton more money into them. They become super strong when inflation is lurking around. Think of big companies like Microsoft. They have this special power where they can raise the prices of their products and people will still buy them. This means they can protect their profits from the sneaky effects of inflation and keep their money safe. So by investing in these types of businesses, you can have a better chance of making your money grow, even when prices are going up. If you're a big fan of Warren Buffett and his way of investing, here's the key. You should put your money into companies that are super strong, have something special that makes them better than others, and can keep growing for a long time. Buffett wants us to stop worrying about the ups and downs of the stock market right now and look at the big picture, thinking about what will happen in the future. Amidst all this talk, there's a pretty smart idea that fits perfectly with what Warren Buffett believes. It's like a plan that's waving at you, saying, "Hey, come join us on this journey with Berkshire Hathaway Incorporated. This company is like a ship. And guess who's steering it? Yup, it's Warren Buffett himself." Now, the cool thing about this idea is that you don't have to stress about watching the stock market and buying and selling stuff all the time. You're kind of handling over the reins to Berkshire Hathaway Incorporated and letting Warren Buffett's experienced team do all the tricky stuff for you. It's like following a bright, safe lighthouse in the middle of the stormy stock market sea. It can help you stay calm when things get rough. To sum it up, I want to emphasize that I'm not a financial expert or someone who can predict exactly what will happen in the ever-changing world of money and investments. Predicting how things will go in the financial world is like trying to solve a really tough puzzle that even the smartest folks find tricky. But there's something really valuable we can do. And that's learning from the past. When we look at what happened in history, it's like finding secret treasures of knowledge. It helps us understand how people react in different situations, how things work in the world of money, and the complicated gears that make the economy run. With this knowledge in our pockets, we're better prepared to grab opportunities that come our way, no matter what life throws at us. I hope this video has been like a light in the dark, giving you new ideas to think about and inspiring you to talk about money stuff with others who are just as curious. So, let's keep learning and growing together. Warren Buffett famously said, "Risk comes from not knowing what you're doing." In this quote, Buffett emphasizes that many investment risks can be mitigated or avoided by thoroughly researching and understanding the investments you're involved in, underscoring the need for informed decision-making in the financial world. And there you have it. Please share any advice, good stories, or inquiries you may have regarding this video in the comments section below. I'm Wisdom Will. Thanks for watching this video, and see you again next time. Have a great day.